Hey folks, welcome to episode 13 of FinMet Mondays. Sunil, welcome back on the podcast.
Thank you, Shawn. Nice to be back.
It's great to have you back. So last Monday, Sunil, we spoke about how a 0.75 basis point rate hike was too far-fetched for the Fed. And 0.5 was the more realistic one. But I think the Fed got too pressured to act and stabilize the market, so they went all in to rein in inflation. Gold held its own, surprisingly, and we did not see as much of a sell-off in the markets as you would have anticipated. So my question to you is, looking ahead, do you think a rally in gold is imminent?
I think it's quite uncertain. From just talking to people in the market, there seem to be two very strong opinions. There's a camp which is looking at a general asset sell-off, and they're saying that gold will get sold off along with that, especially because interest rates are so attractive that people wouldn't invest in gold. So they think gold is going lower. But there's another field of thought which says gold is going to go higher because inflation expectations remain high, and so you're going to see gold surge up. I think, to be honest, I'm not sure which camp I'm on. I think, given the fact that the two opposing camps are going to dictate the movement, we're likely to see a range-bound movement of gold, like we saw last week and also the week before, where it traded between, let's say, 1820 and 1880 kind of levels. We seem to be seeing that for now.
Understood. So I think it also makes sense to think about how gold is not the only commodity that is probably getting affected, and silver, on the other hand, is also something that is able to sustain the bearish wave, which is surprising for me because silver, when you think about it, it's more of it acts as both a monetary metal as well, but it's also an industrial metal which has industrial applications. How do you think the market players have been treating silver in this environment, given that largely it has been tracing the movement of gold, but it also reacts to if the industrial output or demand is increasing?
Right. So you have to, like you said, there are two factors. One is the way that the industrial metals are behaving, which is copper, platinum, palladium, and other base metals also. And the second thing that drives silver is the way gold is behaving. And so I think what we're seeing as a dominant force right now has been the fact that industrial metals have been sold off. So silver also is getting sold down. It probably hasn't gone down as much as, for example, copper or palladium or even rhodium, which is down almost 70% from its highs. So it hasn't gone down that much, predominantly maybe because gold has remained up around the 1800 level, so silver is held up because of that. But for now, clearly, it seems to be driven by the industrial sell-off that we're seeing.
Makes sense. And do you think, based on this, gold will be able to outperform silver by the end of this year?
Yeah, it's a tough call. Something that the industry experts look at very carefully is something called the gold-silver ratio, which is simply the price of gold divided by the price of silver. And that's at a very high level. It's around 86, 85, 86 right now, whereas traditionally the 25-year average has been around 50. So we're really in a very high sort of gold-silver ratio, which means silver is undervalued compared to gold. I do suspect, in my view, silver should catch up more and the ratio should come down. I don't think gold is going to race up too much, or if it does, silver will pick up much more than gold.
Understood. Thanks, Sunil, for your views, and let's see how the markets play out this week, and see you next Monday.
Thanks a lot, Shawn.